I've been getting a couple of messages from people about um, how to find levels and how to actually um, create the perfect levels. So one of the things that I always comment on is that there is no such thing as perfect levels. It's the levels that are good to you and good to your eyes. Um, a lot of the times when Kevin and I are trading, I'm always putting out these key SPX levels, and those levels always come off major SMAs on the daily, which most of the time have a tendency to coordinate with pivot structures or pivot points. So today's live session is going to revolve around what are pivot points, how you can use them, and how you put them on your chart. And this is a great tool for people that are having a hard time finding levels and drawing levels because a lot of people have been taught that levels have to be perfect, they have to have three touch points, etc., etc., etc. And that necessarily is not the case. Levels most of the time exist where either price is getting rejected and where price is getting bought up the most. And those are key areas. And it doesn't necessarily have to be one or two or three touch points. It could be four, five, six, the more the merrier. But this is where pivot points come in play and they help eliminate the work, which is not something that I am an advocate for, but it does facilitate the work of identifying key areas. So let's get right into it. Pivot points. So, what are pivot points? Pivot points are mathematical levels that are used to find important levels each day. It's widely used by hedge funds, highly used by day traders, and everybody who wants to make life a little bit easier. So, why are pivot points used? You have to think of it like a GPS for a stock in the sense that it's going to go to that place and then it's going to go back home, right? It helps predict where prices might stop and change directionally. It provides potential support and resistance levels. Now, granted, these levels are not always going to be accurate, but they help. They help determine the market sentiment because you'll see that there are key pivot structures in which directional movement either turns bullish or bearish. And it works great with other indicators, right? So pivot points are fantastic because they allow you to have additional confluence um, to whatever system of trading you're using, right? So you have support and resistance levels. So support levels, which is S levels, are levels below the pivot point where the price might stop. So you're going to have multiple support areas. It's going to show you support 1, support 2, support 3, support 4, support 5. And those are going to tell you all of the targets that are going to hit once you start breaking to the downside. So again, S levels are levels below the pivot point where price might stop. Falling and reverse, failing and reverse upwards, they act like floors, right? So in other words, think of it as like a step ladder to the downside, right? Every time you're going down the ladder, you're going to hit a stop, and then so on and so forth till you hit the bottom. Resistance levels, also known as R, are levels above the pivot point where price might stop, right? So obviously, think of it as a ceiling. You keep climbing the ladder, eventually you're going to hit the top of that ladder and you can't go up any further. Now, the cool thing about pivot points is that you can set them up on daily structures, weekly structures, monthly structures, quarterly structures. So you can have multiple pivot structures on your chart where you can find areas of confluence, right? Which I'm going to show how to do that on the chart and show you how I use pivot points and how accurate they are with the setup that I use. So here's a few tips. Never just go off the pivot points. You have to use confluence. A lot of people will say, oh, I'm going to trade price action on pivot points. And sometimes price will get below the pivots and then come back up. Remember, these are not perfect levels, which is why you have to have a little bit of leeway on what it is that you're doing. They're most effective on daily, weekly, and monthly charts, which is what I said earlier. And you always want to make sure that when you're using pivot structures, you always have a stop loss strategy because you don't control what the market's going to do. So, case in point, let's say you have S1, which is support 1, and the market's price action is trying to blow below S1 to S2. But let's say that you're bullish because you think there's going to be a bounce off S1. Sometimes price action will just blow through support 1, support 2, and then bounce at support 3. So if you're thinking that pivot points are the holy grail to identifying areas, they're not. They serve as a base as to where it is that you can potentially have a bounce or a break of structure to the downside or to the upside. And the best part about the best tip I can give you is that with pivot points, you can actually back test them and you can practice them, right? So you can see how pivot points are working on whatever instrument it is that you're trading. I have found that pivot points work very, very well on stocks that are either high beta, which means that they're volatile in the market, or that are that have I wouldn't say increase amount of volume, but somewhere in the middle of the volume range, right? Pivot points sometimes won't work on low volume stocks because low volume stocks have a tendency to do whatever they want. So as long as you're trading mid cap and mega cap, you should be fine. Granted, you can trade small caps on it because it does work, but I wouldn't suggest that you be trading some penny stock or anything like that on a pivot point structure because it just doesn't make sense, right? So let me dive right into on the application of how I use pivot points, and you'll see the confluence that I use when it comes to pivot point structures. So let me go ahead and close this, and let me open up. What did I just do? Let me go ahead and open up a chart. So we're going to use Unity as an example. So the first thing that I do before I put on my pivot structures is I like to do the following. I like to come up to the following time frame. I like to come up to the monthly, right? And what I'll do is I'll do a little dotted line there, and I'll just get the high of the month, right? And then what I'll do is I'll do previous month high, right? And then I'll put previous month low. That's the first thing I do. Then I'll move over to the weekly, right? Because we want to look at the weekly chart. And what I'll do is I'll do the previous week high, and then I'll do the previous week low. And there's a reason why I want to have these areas, and I'll explain previous week high, and then previous week low. The reason I do this is because I want to know where price action was the previous month, obviously, and I want to see where we were trading inside with respect to the previous week, which obviously, as you can see, will show you weekly levels and monthly levels, which serve as major supports. So now let's go towards the application of a pivot point. Let's put on our first pivot. So we're going to go over here and we're going to type pivot point standards. Okay. And you're going to go ahead and you're going to click on this, and it's going to add a bunch of confusing lines, which are going to drive you nuts. Right. So let's go. Oh, God. So let's go ahead and ignore all these lines for a second, and let's just focus on the settings. So we're going to double click on any of the lines, and we're going to come over here and we're going to change from auto to daily. Okay. And then the number of pivot points that we're going to look back is just going to be 1. Okay. And then what we're going to do is we're going to create the P. We're going to make it green. Okay. And then what we're going to do is we're going to put the S1s. We're going to make them less. I like to make them red just because for me, I just like this color. And then what we're going to do for resistance is we can make yellow. Just again, because it just works for me that way. And we're going to go into the intraday trading chart. Right? Today was a very interesting day because there was a lot of volatility. But this is a perfect example of how these pivot points were calculated, and they show you exactly where levels of support are and where levels of resistance are. So here you can see that you serve S2 is serving as support. We never broke below it, and it went to S1, which served as a resistance. And we all know when you break through support and it goes back up, it then becomes a resistance. And when you break above it, it becomes support again. So look at how accurate these daily pivots are when it comes to trading. So what I like, since I'm a swing trader, I like to not only look at the intraday price action, but I also like to know what is the weekly pivot structure. So what do? I do the same thing. I already have it saved, which you can. So I add another pivot structure. And what do? I come to the pivot structure. I change this to 1, right? And instead of having auto, I change this to weekly. Okay. And then the only thing is that I do is that I change the weekly pivot structure, right, into a different color. And I want to make sure that I have it on traditional, that both are on traditional, right? Yep, they're both on traditional. So now what I've done is I've added weekly pivot structures with daily pivot structures. And you can see that this S1 on the weekly and this S2 is almost serving as a little buy zone, right? For supply and demand zones, right? And it's very simple. What better confluence can you have than by having a weekly pivot structure and a daily intraday pivot structure showing you key areas of support and resistance? So Unity is a bit of a volatile stock, and we'll use another example. But here's a perfect way of how you could have gone long here, right? And you would have had your price point. So Unity held S2 on the daily intraday structure. We knew, as you can tell, it's not perfect, but we knew that 2105 on the S1 on the weekly support was serving as a little bit of resistance. But as price broke through it, right, you could see that it tested support multiple times. So if you felt bullish, you could have gone bullish. It broke above weekly, retested weekly, and then it went to touch S1, right? Where you see that it formed that resistance and then broke above. So if I would have been taking this trade, why do I always do that? If I would have been taking this trade and I've seen that this S1 on the daily and this S1 on the weekly is forming a little buy zone, and based on price action, I can tell that there's buyers here, I have no problem going long and putting a stop somewhere underneath, right, the previous month low. Because if it broke below S2 and it broke below and it failed support at the monthly low from last month, there's a high probability it's going to go over here. So the reason I was saying that you draw the monthly levels, the previous month, and the weekly levels is because this is your major area of support. And this is a perfect example of how the monthly support is so close to the weekly and daily structure. So this gives you an entire game plan as to what to do. So let's say that you were long. You know that you have a giant gap to fill, right? So ideally, you would be long and you would obviously start taking some profit, and then you would put your stop losses to break even, which coincidentally, look at how you broke above the previous week low. You would put your stop at previous week low and profit, because ultimately the idea is for the target to fill that gap. And all of this was done by simply doing a monthly level, open and close. I'm sorry, high and low, daily, high and low, and using 2 separate pivot structures, right? So the reason I love this is because it helps novice traders identify levels of support and resistance, key areas of resistance, and not only that, but it makes life easier for you, because the purpose of trading when you have tools is to make you work, is to work smarter, not harder. So if there's something available to you that you can use, if it is that you're having a hard time drawing levels, because a lot of people do, there's your solution. But you have to understand that this is not a perfect tool. Nothing is perfect, right? So I feel that if you guys have any type of problem when it comes to trading or finding levels, because I like to draw key levels on the line chart, but we're not talking about that. These pivot points are going to help you more than you can imagine. Now, it doesn't matter what type of chart you use. Look at how well it works off the line chart. It's perfect. And it just shows you exactly where it is that you can take a trade. Look at this perfect 5-minute double bottom. It's pretty much there, right? So, and I like to use volume candles because it shows me how much volume is within that candle, as opposed to having volume down there. This is just my weapon of choice because, like I said, I like to make things easier for myself. So let's say that you wanted to add even more confluence to your levels. Well, you can come over here. You can go to pivot points, and then you can change this to daily, and you add a monthly, and you have the same concept. You add a 1, right? I'm not going to go ahead and change this stuff because it doesn't make any sense. But now, well, actually, you know what? Let me make life easier because those colors are a bit confusing. So let me just go ahead and just make these white just for educational purposes here. Just give me 1 second. I wish there was an easier way to do this, but there isn't. Right? Now remember, they don't have my previous month lows and highs are different than what this mathematical equation is using. So what do we know now? Now we have monthly pivots, we have daily pivots, and we have weekly pivots. So what have we accomplished? We've accomplished one thing. We know that in this area, it could be a key area. What do we see up here? We see that at 2290 on the monthly structure, there's some resistance. And wow, what a coincidence. Right around the 2241 to the 2265, you have two major pivots on the weekly and the dailies that are showing you that this is a reverse of course. So now that I've explained what these pivot points are and how to draw them, let me explain to you what a key pivot structure for directional sentiment is. Let me go ahead and take off. Let me just leave this on. So think of this area right here as the midpoint of support and resistance levels, right? So what you have here with this key pivot structure, which we'll call the green pivot structure, is a change of trend. When you're trading below the green pivot structure, the trend is bearish. When you're trading above this key pivot structure, the trend is bullish. So the reason I do it green is because when we break above the green line, green means for go, right? But you always have to wait for one thing. You always want to wait for price to break above the pivot structure, come back and retest, right? See if this zone right here holds. And if it does, you can take a gamble or an educated guess that we're going to start to move up and target R1 on the intraday. And then R2 is going to come up here. And then, of course, since we already drew our previous week high, we know that this is going to be an area that we need to break. And if we break above it, then you can always target R2. It's as simple as that. Think of this area as nothing more than a trend reversal spot. You break below it, it's going to go bearish. You break above it, it's going to go bullish. Remember, these calculations are made, it's a mathematical equation that's made using the high-low close of the daily candle. There's no need to overcomplicate your life on trying to understand what the mathematical equation to doing this, right? You can Google it, whatever it is. You don't have to overcomplicate yourself on how it's done. If you want to figure it out, that's fine. You can Google it. But all you have to know is this, if to keep it simple. Pivot points on the daily structures are calculated on the high, low, and the close of every daily candle. So your pivot points are going to change tomorrow because it's going to use today's data to create a new pivot point structure. And that is what pivot points are. If anyone has any questions, if anyone needs me to show them how to add them again, feel free to ask me. Or for that matter, Kevin, if there's anything that you want to ask me that the floor might want to know that could be helpful, go right ahead.
Yeah, I just want to clarify. So basically, you probably said this, but these, since you set it to one, every single day it's gonna populate new pivot points and levels that are different than the previous day. I just want to make sure.
Correct.
Yeah,
Correct.
yeah.
Correct.
So
Because it's using the daily information. And you want to have the daily information of each candle if you're intraday trading. If you're using the weekly pivots, it's using the previous week. And those remain static until the next week.
yeah, I think the reason why also like I'm Indian, so I'm a huge advocate for math. You can find math a lot of times in trading. I use fibs, like I said earlier. The reason why pivot points are amazing is because they're mathematical formulas that go according to yesterday's data or last week's or whatever it is. And the thing is, you could correct me if I'm wrong, JP, because you use pivot points more than me. But pivot points don't print and reprint in the same day. They just populate in one place and then that's it,
Correct.
right? Yeah.
Correct.
So
They are static levels that remain on the chart until the close. That
yeah,
is correct.
exactly. So that's why like that brings importance, for example, to when he was talking about the unity in the opening. What was it like 1 hour when it came down to S1 and S2 and kind of bounced around there and broke out of there. When he said it held S2, the reason why it was so important is because that's not like for example, a algo or something that just keeps on reprinting and printing and adjusting itself throughout the day. This is something that these levels came out in the morning itself, right at market open, and it actually held those levels. Now, tying back to a point that JP said, you can't just have pivot points on your screen and be like, oh my goodness, yes, it's going to absolutely hold at this point. You need other confluences. So I guess what I wanted to ask you, JP, is I know people are going to ask, how do I see this on SPY and stuff like that. And we'll get into other questions. But if you don't mind just going to SPY or QQQ, whichever you prefer, and just trying to walk through how you exactly would use pivot points using the indicators that you use, if there
Okay.
was even a possible trade using pivot points today.
Yeah, well, one of the things that happened today was, again, this is not an accurate science, but it sure as hell is pretty good. So when the market opened, it populated the new week and the new day pivot structures, right? So look at what happened. SPY went up and rejected S1, which is, we already know that orange is weekly, right? And it rejected and came very close to S3, right? Very, very close. But it didn't get there. So if you were short and you were thinking that this was going to be an accurate science, right? Well, guess what? It wasn't because it literally bounced and it broke through S1 and it went to S2, came back down, retested S1 and broke right through it and it went right up to the what? It went right up to S2, right? Let me remove this because I don't really trade SPY and that was a previous week. That's funny that I have a changing of the guard level here and then drew a weekly pivot structure there. So it came right back to S1, right? So you can use it to trade SPY and it's going to give you targets, but that would be the same as, you need to have, some other type of indicators to give you to give you an idea, right? So this is just simple RSI. So you can see that RSI, right, was kind of doing this little move here, right, trying to form a little bit of divergence, right, on price action, right? While price was going down, RSI was picking up here, and then we were oversold, and we knew that we had to come back into above median. And here's a perfect example of how you can catch downward price, an oscillator, a momentum oscillator telling you that price is picking up in interest and catching along. And guess what? You could have caught this for a $4 move, knowing that there's a 90% probability that it was going to target right here, your S1.
Wait, explain why that's a 90% probability for it to reach there.
Well, I always like to look at, for me, when I say 90% probability, is because price will gravitate to the mathematical function of this of this script. Does that make sense? It's
Make it
using.
simple.
I can't give you an example, but
No, no,
it's
no.
I'll make it more.
I was saying like if you can dumb it down.
So price will always go to where a mathematical equation has been predetermined, because everyone is trading off the concept of these numbers. That's why Fibonacci's work so well, and they're even more accurate than pivot structures. Does that make sense?
Yeah, absolutely. Thank you.
So, so if you trade on fibs, you always hear people say, "Oh, it's going to the golden pocket. It's going to hold the golden pocket." That's the 50 and the 618, right? And we talk about how those magic numbers have a tendency to work. Same thing with here. They have a tendency to work. Am I going to sit here and overcomplicate my brain if it's off by a couple of cents? No, I'm not. But here's something cool. Let's say that you want to change the formula for your pivot points. You can change them, right? Let me just go ahead and remove the weekly. And again, I'm only showing you how I use mine because I like to use the traditional. But if you're a Fibonacci guy, you can use the fibs. If you are, I'm sorry, if you want to use, I don't know, the Camarilla, which I never have and I'm not a fan of, you can. But I personally like keeping it simple, and I like using the traditional pivot points, which I have found are a lot more accurate than anything else,
So,
right? They work for me, and I find them to be better than the others.
yeah. So, quick question. You're basically saying that that the other options that you had, like the Fibonacci and all that, they're just different equations compared to the traditional, correct?
It's similar. It's similar equations, right? But it's using a different. It's if I'm not mistaken, it's using the same calculation, but it's incorporating an additional methodology to it. I have not gotten into the science of, are Fibonacci pivot structures, how are they different than the traditionals? I wouldn't be able to give you an accurate answer on that.
Yeah. Okay. Um, so JP, I'm gonna go through the questions that were asked. Before I get to the questions, few people were asking if you could just remove the pivot points and just re-add them, and just talk very quickly through your process of why you're adding those things.
Okay, so I'm gonna go ahead and remove all the drawings. No, wrong chart. Sorry. Let me go to Unity. Actually, you know what? I still got to recharge Spy, so who cares?
Yeah, it's
Remove all
okay.
the drawings. Remove all indicators. So I'm just gonna go ahead and just go through my process, okay? Just really quick one more time. I come over here, I draw a monthly, high and low, and then I label it. Then I come over here
Wait,
and
JP, for some reason people can't hear you. Wait, what? How can you guys not hear him? Yeah, I can hear both. Not exactly
hello.
sure. Yeah, I can hear you, JP. Okay, I guess some people were not able to hear you for some reason. I'm so sorry, JP. Didn't mean to interrupt you. Yeah, you could go ahead.
Sure. So I draw the monthly high, the monthly low, and then I draw the weekly high, the weekly low, right? And then I label it just so I have an idea of what the previous month price action was in the previous week. And then I do something very simple. I mean, I'll just put on a 4-hour chart just so it can be seen. Come to indicators. I type pivot points standard. You see all these lines, so don't freak out. Come ahead and click on it. You put it to 1. You come over here, you click on daily. You leave it at traditional. And then I don't really want to go through the process of changing all the colors, but I like to make the key pivot green and then make these whatever colors you want. Okay? And then I'll come back, pivot points, then I'll add another set. And then I'll come here, same thing, put a 1, put the weeklies. And again, guys, you can change the colors, but I think you can tell. And just make the pivot point another shade of green. And that's it. And there you go. Simple as that.
Okay, cool. So, let me
We
ask
actually bounced off a weekly low, by the way.
for
That's
what
funny.
spy?
Yeah.
Would you look at
Is that a
that?
previous week?
So someone
I'm
asked
sorry.
you.
That was previous week. Go ahead.
Yeah, no worries. Someone asked you, is that weekly level only calculating with today's data since it's Monday? So
It's the week. It's previous week.
yeah. So just to add on to JP's point, similar to like the daily
Yeah.
pivot points, it's calculating not from today's data, it's calculating from
It's
the
yeah.
day prior.
So weekly pivot points are calculated daily using the previous week price data. Does that make sense? So the calculation basically uses the high and low close from the previous week's trading period, right? Most of the time from Friday's close, Friday to Friday, and then it's going to give you the weekly pivot structures. And again, I had explained earlier, it uses the high, low, and the close, and then you divide that by 3, and it's going to give you a key pivot structure.
Someone asked, would they include Asian and London session if you were on a futures chart? So could you go to like MES or ES?
I
And
don't pay for futures trading, but let's just see. There's a delayed data. Well, I wouldn't be able to tell you. I don't trade futures, um, so I wouldn't be really. I'm not very useful at that. I mean, I trade. I used to trade futures, but I only used to trade the New York Open, the Cash Open. But you can see here that they're pretty accurate. You know, they serve pretty well. Whatever the hell's down here, maybe we're in an oversold area here. What's going on here? Why is there no RSI? Yeah, I see. We're in an area here oversold and it started to pop. But yeah, they're pretty accurate on anything. You know what I mean? Look at Apple. Same thing. Like I said, it's not an exact science, but it gives you an area, gives you a range. Really well on Microsoft here. When we broke above that, came back down here, and look at how it held this area. So I mean, like I said, it's not an exact science, but it sure as hell does work. Sure as hell does help. Wow. So notice here on Starbucks how it came and it held that weekly pivot structure, right? It didn't want to break below 105. It just started coming right back up all the way to what? Daily pivot. So it had a target from here to here.
you know, um,
And you can see that in between getting to 108 again, you know, it had some areas. It had its little thing that it was doing. See?
the The funny thing is, when I was learning about pivot points, when I was reading up on pivot points about a few years ago, the stock I used it for, you're not going to believe this, JP, was actually when I used to trade Tesla around like 3 or 4 years ago. So I used to read up on
Mhm.
pivot points and I used to try to apply that to Tesla.
Really?
Yeah. Would you mind just showing how it looks like on
Sure.
Tesla?
Sure. I mean, I'll let you go ahead and give your explanation on Tesla as soon as I
Oh yeah, yeah. I have no explanation on it. I just wanted to trade Tesla and I'm like, huh, let me try these pivot points on there. It used to follow pretty well, actually, I remember. It used to do really well with pivot points. Because it used to be very institutionally traded a while back compared to now. But
I
yeah.
mean, again, I always say you should draw your own levels, right? Like it's this is to me, drawing your own levels is the best way to recognize areas of support and resistance because when you recognize a level and you spot it, it's you own it. You own it. It's your level. You spotted it. That's what you see. Punto y basta. It's yours. When you're relying on scripts or any indicator to do the work for you, it's being lazy. I still draw my own levels, right? I still do that. Outside of the monthly and the weeklies, I look for areas where I'm recognizing support or resistance or whatever the hell you want to call it, because I'm looking for where there's major walls on the level twos, right? Which is a different subject matter. Level twos are level two price data, right? So a lot of the times, what I really like is when I draw my level and then suddenly it lines up perfectly with a weekly, right? Then I'm like, oh wow, perfect. Okay, like I hit the jackpot because if you can eye it and you can see it, and then you just maybe want to back test it with a key pivot structure and it lines up with yours, it doesn't have to be exact, but damn near to it, then you know that you're going down the right road. I've always said this. I believe pivot points are a great beginner's tool for people that are trying to understand where there's areas of support and resistance, right? But again, this should not be something that you sit there and you say, "Oh, I got pivot points. Oh, great. I'm never going to learn how to draw levels. Screw that. This thing does it for me." Because that's not the idea here, right? Eventually what you want to do is you want to be able to just remove all indicators, right? And you want to be able to look at a line chart on a daily, right? Come on. Come on. Look at a line chart on a daily and start to find major areas, right? Because that's what you want to do. You want to be able to trade clean. You want to trade on a clean chart and trust your levels, trust your areas, right? And and believe in them, right? Like we've all been talking about that. We've had this 373 area for I don't know how long. You know what I mean? We've been talking about this area. You don't need a pivot point to do that for you. You don't need a pivot point for that. Am I right or am I wrong? So you know that price is bouncing off 374. Now, maybe the pivot point structures line up, maybe they don't, but you still want to put in the work. You don't just want to depend on them. Does that make sense?
Yeah. No, it definitely
Yeah.
does.
Yeah,
Um,
405. I hate this guy.
um, Someone asked, what do you think about hourly levels?
I don't use hourly levels. I use 65-minute levels and I use 130-minute. Um, I keep it very simple. Like I like to use 4 hours um, as key intraday levels. I don't like going anywhere underneath this. My favorite time frame to trade on is the 30-minute. You'll see that I have the 1 and the 5 and the 15, but to be very frank, I really do like waiting for the first 30 minutes of price action, if not an hour, to get an idea of what the hell is going on. and then kind of find an extreme of tops and bottoms within that first hour of trading, and then see where we are within that structure for the intraday. I don't, I really am, I'm not doing hourly levels, to be frank. I'd be lying to you if I tell you if they're good or they're bad.
So you gotta ask. So technically, daily levels to be drawn out, whereas weekly and monthly can be accounted for with the pivot point indicator.
Theoretically, yes.
Um, would you use shorter time frames if you were doing more of a scalping style instead of swings?
Absolutely. Absolutely. Like, I'm not gonna sit here and tell you, hey guys, let's go do crack and trade on the 1 second, right? And I'm not gonna sit here and say, hey guys, let's upgrade our lifestyle and let's go to the 30 second. No. I like to use the 5. I like to use the 15. I try to avoid these two time frames, to be quite honest. The smallest time frame that I do like to use at any given point is the 15-minute. I think that the 15-minute um candle is very important for you to get an idea of how the market feels. 5-minute candles, in my opinion, can be very deceptive. Yeah, sure, if you have some EMAs or SMAs and you're following the trend down, they can be very helpful. But again, I'm trying to avoid trading within this time frame, this first 30 minutes. I don't want to be in this at all. I like trading the last 30 minutes to find swings, and that's been because of you, Kevin. You've taught me to be more patient when it comes to that. And also our good friend Tom Nightingale has also, you know, been very helpful when it comes to being more patient. So I like looking at the bigger time frames. But if you're gonna be scalping, yeah, I mean you could be using the 1 and the 5, but for me personally, I already have thinning hair. I'm not trying to agitate myself more and creating a negative ambiance around my environment to where my hair gets thinner faster. So I try to avoid scalping at all costs.
Hey, it's okay because the more your hair thins out, the more
Shut
Hims
up.
tablets you can
Shut
buy,
up.
and my Hims shares will go
Shut
up.
your mouth.
So,
Shut up.
come on, man, I needed to go to like $60 by the end of the year, So help me
The
out.
worst part about it is that Tom Nightingale is in here and he's probably going to use this against me.
Uh huh. Yeah, he better. Um, what else was I gonna ask you? So, it's something to add on. I know you didn't ask me. You guys were asking him. Um, but I remember when I like was day trading, let's say 6 years ago. Um, sometimes I didn't really like going on the daily and the weekly and plotting it. That was just my younger self. I'm acting like I'm older now, but uh, I used to the time frames I really fell in love with when it came to day trading was the 30-minute and the 2 hour. I feel like you can find a lot of levels with the 30-minute with any chart you find. And the great thing is there's just a lot of enough data sometimes to just look at the 30-minute, be like, oh, okay, all right, we kind of gap down over here, and this is like the previous low that we broke below, and the 2 hour kind of gives you a bigger perspective. But the general rule of thumb is that the bigger the time frame, the more importance the quote unquote levels or areas of interest kind of hold. So even when you're scalping and stuff like that, I personally think, and I know JP can attest to this, it's always great to have bigger time frame levels, because the last thing you want is for you to take a trade based on a miniature time zone level and then it just gets invalidated because there was actually a bigger time frame level, around that point that you just did not pay attention to or something like that. Right, so that's just my 1 cent on that. Yep.
Does anybody have any more questions?
Any questions about pivot points, or did Uncle JP explain that pretty well?
One stock cams. Wow. Wow.
Yeah, I think he explained
The
it very
only
well
other
too.
thing I want to add is that, listen, I've I've been the kind of guy for the past 20 years that I like to read. I like to over analyze things, and I've applied that methodology towards all aspects of my life. And let me tell you something. The way that you trade is a reflection of your personality. Um, I was never an emotional trader. I was never someone that would overthink. But unfortunately, because of just life in general, that happened. And I became an overthinker and I would just try to big brain everything, which is great. It's good to be like that, right? But when you're trading, you want to keep things as simple as possible. And I personally am someone that uses, I would say, compared to a lot of other people, I think I use a lot of indicators because I like having the daily SMAs and I like having my EMAs and I like having RSI plus my pivot structures. Sometimes people say, yeah, man, there's a lot of stuff on your chart, but it's what's working for me right now because it's what I need at the moment while I am rebuilding my confidence again in 2024 because 2024 was a decent year, 2023 was a bad year. So it takes time to rebuild things. And sometimes something like pivot points on your chart and allowing something to work for you can sometimes make the process easier, and making trading easier is how you're probably going to have more success, right? So, because I'm a swing trader and sometimes an intraday trader, I keep the weekly and the dailies. And on top of that, as I had mentioned, I draw the previous month and the previous week high and low. That's it. That's all I'm really charting. Now, there are some charts that I have that you go there and you look at them and you're like, it looks like I was I'd stayed up all night trying to figure out what I was doing. Like this is my
My God.
my Litecoin uh, ETF chart, right? And I'm just like, these are all mine levels. But what I'm trying to get at is, if there's something that's helpful and that can be easy for you, use it. Just make sure that you have other confluences, and pivot points serve that purpose.
Yeah, absolutely. And I love math, so there's that. Doesn't love math, right?
So, if anybody has any other questions, if anybody has anything else that they want to know, please feel free to ask.
How can you tell what is really going to work to make it easier?
I think that's a you question. You know what I mean? That's a thing that you have to figure out. I've I'm
Yeah.
a level two. Like I love trading off level twos, right? If it was up to me, I would turn off all my charts and I would just be reading level twos and time and sales and just trading that way. But the reality is that, you know, sometimes level twos fail you because they're hidden orders. Uh, wink, wink, ghost orders that appear out of nowhere that you can't see because we don't have that in-depth knowledge. I'm sorry, that in-depth data. What's gonna make things easier for you? You gotta play around. Maybe EMAs work for you. Maybe Ichimoku Cloud works for you. Maybe trend regulating moving averages work for you. Maybe SMAs. It's whatever makes it more comfortable for you. And you know, I always say keeping it simple is actually easier said than done. Um, but once you start to feel that something is right and it's starting to make more sense to you, then it's gonna start to work and you're gonna have more fluidness to you. Like a lot of you guys don't know. When I from the age of 7, I played tennis. Um, I was a top ranked junior tennis player in the states, in the state of Florida, and in the ITF, which is the International Tennis Federation. I was going to turn pro, but that didn't happen. Fast forward, when I started learning how to play tennis, you know, there's a shot called the backhand. So everybody was trying to get me to be a two-handed backhand player, but I didn't like hitting the ball with the two hands to my backhand. So I became a one-handed backhand guy. Um, when I was learning how to hit my forehand, there's different types of grips. There's the continental, there's a western, semi-western, different grips how you grab the racket. I developed my skill so that the grip that I use, the way that I hold the racket, is a semi-western grip. So the same thing happens with trading. You know, there's going to be things that you find that work for you that it might not work for other people, right? Some people like to use RSI because they feel that RSI is better than MACD. Some people live by MACD because MACD is better than RSI in their opinion. Some people love stochastic ASR. Some people love money flow. Some people love the ascending descending line, right? It's all about what you feel comfortable with and is easier for you to comprehend. One of my really good friends, uh, and our other business partner used to trade on Ichimoku clouds. By the time I figured out what Ichimoku clouds were, I had given up, you know? And I had to find something that was comparable to what I grew up with trading, which was obviously moving averages, parabolic SARs, which is an antiquated indicator, and Bollinger Bands. Um, so I had to admit to myself that, hey, I'm an EMA trader. I'm an SMA guy. This is what I like. This is what makes me feel comfortable. Is it a lagging indicator? Yeah. But guess what? I haven't been able to remove those squiggly lines off my screen because when I don't have them on my screen, I feel naked. Even though I know I don't need them, for some reason they're just there and they make me feel safe. Can I take them off? Sure. But by trial and error, I've realized that I need to have them on just because they make me feel good. Right? I don't care what someone else says. I don't care if someone says that I got too much crap on my screen. It's not their money, it's my money. So yeah, find the things that make it easier for you. Sometimes having a bunch of stuff on your charts work, but just make sure that you're not, getting to the point where you have so many things on your chart that you can't even see what's happening, right? But at the end of the day, you have to find your own methodology. And like I said, you have to identify what it is that makes you feel comfortable. I'll end this tiny rant with this. Kevin is a very unique trader because he trades naked. Ugh, God, I shouldn't have said that. He trades on a naked chart. That even sounds worse. He doesn't have many indicators on the screen. He has VRVP and he has his own levels that he draws. I love how you looking at VRVP, which is a volume range profile, right? I love it, but I don't have it on all the time. Kevin uses it and it works really well for him. I don't trade like Kevin, and Kevin is able to identify areas of support and resistance of volume shelves. I can identify them as well, but not as well as Kevin can. It's a great tool for me to have, but it's not something that I feel is making my trading easier. Does it make me identify volume gaps? Absolutely. Will I use them? Sure. But it's not my weapon of choice. It's more like my side pistol. So it's a bit of trial and error and understanding what kind of style you like to trade. So, yeah.
That was a beautiful poem. Um, I I guess the only thing I can say to that is you got to figure out if you're like me and you only got 2.3 brain cells, or if you got, you know, 50 brain cells like JP over here. So if you're like me and you're kind of slow and yeah, as I said, you have 2.3, average daily brain cells, then maybe keeping it simple is just the way to go. But if you're able to process data a lot better, or you just work with more confirmation, then what's the issue with that? Um, the great
That's the
thing,
thing, right? There's nothing wrong with having more confirmation. You'll see that a lot of people have MACD RSI on at the same time. So here's a perfect example, right? Land bridge. RSI gave signal long before MACD did. And then MACD gave confluence here for a continuation trade to the upside. Maybe you're the kind of person that likes using MACD and RSI and wait for the moving average convergence divergence to form a signal so that you can take a trade. But notice that you're already late because RSI signaled long way before, right? But maybe you're that guy and that makes you feel comfortable because maybe you need more confluence. Maybe that's you. Maybe you're going to be late to the trade. Maybe you're not. But that's who you are. And if that makes you feel happy, you don't care what happens from here to here. Maybe you do, but you're going to care if you're an RSI MACD trader and you waited for MACD to form a bullish cross and histogram to form, this is the histogram by the way, to flip bullish, you might have not gotten the move from here to here, right? But you got the move from here to here. And does it make a hell of a difference? Like, are you stupid or are you the idiot for not catching it down here? No. Maybe you're just the guy that likes to play it safe and you caught it from here to here. I mean, I wouldn't be trading this blindly like this unless you have levels and you understand what you're trading. But, you might be late, but you still caught a great move on land bridge, right? Here's a perfect example of maybe that makes you feel happy. Maybe you need to throw up I don't know, some EMAs. Maybe the EMAs make you feel happy, right? And there you go. Maybe that's how you trade. Doesn't matter. It's whatever you like. Don't let anybody tell you that the way that you're trading is wrong unless it actually is wrong, right?
Yeah, if it's
Like
not
if you
working
think
for
that
you.
when it breaks and closes above the 9 EMA, it's bearish. Like, come on, you don't do that. You know what I mean?
Yeah, I think it's you're basically nailing it to the point. It's just more it's not about what makes you happy, it's just what works for you, because we all perceive information on a different, level, and some people definitely perceive information differently. So yeah, I mean, as long as if you find something working, and working doesn't mean you just feel great about it, working means you actually find yourself consistent, then it's absolutely something you should stick with. You shouldn't just try going with whatever you see. If someone's making like, you know, a, an amazing amount of money with some strategy, it doesn't mean you just hook onto it just because it's working for them. You would only want to look at it if you feel like that's gonna fit with the way you trade, because each strategy has its own way of working. That's definitely for sure.
And they all have their pros and their cons as well. You know what I mean? I mean, again, the only true, the only, there is no true indicator, right?
Price.
It's everything is driven by price action, exactly.
Yeah.
But, some of us don't have the capability of being price action traders, which is something that I recommend everyone learn. And learning how to read candles, and chart patterns. But at the end of the day, you know, these tools exist to facilitate your life. Do they work? Sometimes they do. Do they don't work? Sometimes they don't. I'm sorry, sometimes they don't work. And the thing is that markets are ever changing and there are separate moments. I'm sorry, not separate moments. There are different periods in time where certain indicators work better than others. Certain EMA timeframes work better than other. Sometimes it's a MACD kind of environment as opposed to an RSI kind of environment. So you also have to understand what environment you're trading in and have a general concept of most of the indicators, at least the traditional technical indicators, so that you can, if the market changes and your strategy for some reason isn't working, you can always adapt. Because if you don't learn how to adapt, you can easily die in this trading environment. And I'll give you a perfect example. A couple of years ago, the 921 EMA cross was working beautifully. And then for every single retail trader. And then it is my opinion that institutional traders realized that everyone was trading on EMAs. And every time that there was a 921 EMA cross on the 5 and everyone was chasing the breakout, they would slap that down so bad to the point that people just were like, dude, EMAs don't work anymore. There was also another example. If everyone remembers Lux Algo, smart money concepts,
Oh
There was a
God.
point where that indicator or that wink wink algo was so accurate, it was working incredibly. And then it became completely invalidated because so many people were using it that people were saying, hey, wait, hold on. I even think that it might have been institution. They were like, wait. All these idiots are buying down here, kill it. And suddenly big money would come in and just flush through those areas. So that's why it's important to understand um, what's working in that particular trading environment and what's not working. I saw that someone asked what EMAs I use. I recently updated my EMA structure. Um, I continue to use the daily SMAs because these form static levels. These are the static daily SMAs, which are the major moving averages of that particular underline, right? And that indicator is called this. Uh, oh boy. There it is. Daily SMAs 10, 20, 50, 100, and 200 by a dude called Immortal Freedom. These are static SMAs that remain on my chart. They never leave. And remember, these are always major areas. Like everyone always says, oh, we're trading above the 50-day SMA on the daily. Well, when we're trading above the 50-day SMA on the daily and you have a confirmed break and close above it, you know that you flipped bullish, right? But this is where understanding price action and SMAs has to come into play because just because you closed above the 50 doesn't mean that you're going to suddenly flip bullish because the daily SMAs had a 10-20 cross, which means that there's still bearish price action on the faster moving SMAs. But these are the daily SMAs. They're static. They don't move. As for my EMAs, the time frames that I'm using are these. These are the Fibonacci EMA sequence EMAs. I'm using the 8, the 13, the 21, the 48, and the 200. You can disregard this one, but it's this one, this one, this one, this one, and this one. Those are the ones that I'm using. Obviously, you can erase the 100 and all of this. So it's again, it's the 8, the 13, the 21, the 48, and the 200. And I use my EMAs as nothing more than confluence to a continuation of a trade, right? So if I, let's say, took Lambridge and I know that 60-60 was a level, okay, I'm taking the trade. We broke above VWAP. We went up to the 21. We're holding the 8 and the 13, right? And I know that I can stay in this trade because the fast EMAs are catching up with the slow EMAs and we're continuing trend movement, right? And it keeps going and going and going and going and going and going straight up to your weekly pivot structure. No coincidence there. Now, ideally, Lambridge, I hope it can continue to go up because we want to see a 48-200 EMA cross on the 5 minute because if that happens, then you have a short term golden cross that just keeps pushing price to the upside. But this is great because this is an example of how EMAs will tell you, hey, everyone that people that don't know how to trade EMAs correctly, this is a fake out because the 50 tried to catch up to the 100 and it did a fake cross. It didn't cross. It created that idea that it was going to cross, and what happens is a lot of people will anticipate the cross and then it'll do this. And then it does one of these things where we never get a full cross for a full trend confirmation. And it just literally just goes like this, right? And then this thing just drops like that. But yeah, that's also like, you can't just depend off the EMAs and pivot points to take entries because if you were just waiting on crosses, you would be late. That's why it's important to have confluence and multiple confluences to give you an idea of where to take entries and where not to take entries, right? If you were waiting strictly for crosses, you would have been late on this trade. And sure, you could have caught a nice move, but you would have missed all of this, right? So, yeah. This is a conversation and a story for another day, but just so you guys are aware for those that asked, I'll show you one more time. Disregard the 100, and these are it. And for those of you that are asking, well, how did you find that indicator where you can add all 6 EMAs? Because I can't find it and I have to add everyone manually, and then you have like a row of 10 things here. Very simple. Just look for this one by Chalol. 6 exponential moving averages and 2 SMAs. And then you can pick whatever color you want and whatever thickness of the line you want, whatever floats your boat. So yeah. Any other questions? I guess not. I guess that's it. Wait, maybe not. The levels again. Can you be a little bit more specific? What do you mean by the levels? You mean the pivot points? How to draw them on? Oh, the EMAs? Sure. And forget about the 100. You don't need it. At least I don't need it. Maybe you need it. Maybe you like the 100. And disregard these SMAs things. So it's the 8, the 13, the 21, the 48, and the 200 on the inputs. And then on the style, you just, pick the colors that you like and whatever. And I don't know why I don't have the 200 set as the 5, but I guess it's maybe just because I like having them in sequential order. But that's about it. Remove drones and remove. I am so stupid. Remove.
Something from earlier that I wanted to add on to was when I first started trading, what is it, 11 years now? When I first started trading 11 years ago, I was very much younger than I am now. I was 12, and when I first started, there was no YouTube was of course around, but the type of content that was on there was, as you could probably tell, all shilling of penny stocks and courses and stuff like that, and there was not much free education out there. And the only thing I had was books. But the funny thing is, like, you guys have heard I've always, talked about Richard Wyckoff and his books, and you could call him, like he talked a lot about the supply and demand zones, price action, stuff like that, markets, actual market structure, not the dumb ICT term market structure. But the important thing was, reading a book is one thing, or watching a video is one thing as well. But what helped me, because I didn't have anybody help me, till this point I never had like a quote unquote mentor or anything like that, or anybody to help me out learning anything. I realized the best way to learn is by observation, and to observe you need to also give the time into observing. Whether that be during the regular market hours or whether that be after market hours. I'll tell you what I personally used to do. Thinkorswim, I've always highly advocated for them because it's an amazing platform. And one of the features on there that's so lovable that I feel like I wish a lot of you guys would utilize is there's a rewind feature, or there's like a on-demand feature. That's what it's called. And you could literally go back, I think up to like a year or 6 months of data. You can go back from today all the way to like November, I don't know, 11th last year, and you would actually be able to see the chart of SPY or whatever stock. You could see any stock, the entire option chain, the actual movement of the options. And what you have in front of you is basically a rewind button. So, whatever you want to test out, whether it's indicators or just trying to figure out, okay, if I can read price, Thinkorswim is a great platform, or even TradingView, because I know TradingView has a rewind feature. It's just not as great as Thinkorswim, because Thinkorswim actually gives you the opportunity to buy contracts with fake money on the on-demand feature and actually see it moving up and down. And the great thing about that is you can actually practice what you've observed and what you learned and see, okay, is this working? Is this not working? because trading with paper money is one thing. It helps a lot of people, and some people say, help me a little bit, but it's not letting me experience with real money. Well, the thing is, before you want to risk any real money, maybe the best method is to actually observe, understand, and then implement. So I mean, that's what I personally did. And I'm no smart guy. You could clearly see by my English and the way I explain things. I make it very simple, for a reason, because I believe things are meant to be simple. And if you observe things yourself instead of just only switching on once the market opens and just looking at people on Discord posting stuff and only going according to that, and just like looking at the 5 minute chart and only looking at today's chart. No, like take a step back. Sometimes the best time is after hours because you got nothing else distracting you. You got no current price action going on. Just go on your charts, go on to Nvidia, Tesla, Meta, Amazon, Google, Kroger's, Walmart, whatever you want. Go into any time frame. Go into 30 minute, the 5 minute, the hourly, the 2 hour, the daily. We've always talked about what time frames we love using, both JP and I. And the easiest thing to do if you're like thinking, oh, I don't know where to get started, just go back and see where exactly does price react, right? And that could be the footsteps, the first footsteps to actually figuring out how to draw good levels. You can't just figure out just by hoping that one day you're gonna keep drawing levels and eventually one's gonna work out and you're like, okay, I should draw more levels like this. Why not shave off all that learning time and just take sometimes it might take like less than an hour or even 30 minutes. Just go onto a few stocks, just go onto previous data, like yesterday or last week's, and just look at the bigger time frame. See, okay, where exactly is price reacting? Is price reacting, at this area? Why is it reacting there? How many times did it touch there? If it breaks through this, how do I know what makes it different from a failed breakout or a fake breakout versus an actual one? Last session we talked about volume analysis and how that can help with kind of figuring out which is an actual breakout and which is a fake breakout. So there's many things. I mean, you guys could go on our YouTube channel. I mean, I've been doing live sessions for 3 years now. There's so much content on there, which I'll be completely honest with you. I used to charge people $200 to $500 per hour trying to teach this stuff. And, I did that. And, I realized, like, first of all, I don't have the time to do that anymore. And I don't get why people are charging for this stuff anymore. I mean, I honestly don't understand why I used to. So, like, this stuff should be free to you guys. There's so much content out there. But the reason why live sessions is a thing is because there's so much misinformation and there's so much bullcrap, like that one thing you call ICT concepts. There's so much other bullshit that's out there that is just so unconceivably true that I just couldn't stand it. So, I mean, that's why live sessions exist. I mean, our YouTube channel is literally free information. And, I wish I had more time. I was obviously in college when I first started live sessions, so I was unfortunately unable to continue the activity. But fortunately, my business partner, JP, was able to come and co-host, lift off some of the load when it comes to the content that we need to produce. And I mean, you can literally go on our YouTube channel. I think there's 50 videos on there. There's stuff about volume analysis, supply and demand zones, support and resistance levels, the EMAs, SMAs, RSI that JP was talking about. We're going to do MACD soon. There's, what else is there? There's volume analysis. We did that recently. One of my favorite videos on there was literally why you're not profitable. And I felt like I hit so many key points. I'm not gloating. I'm just saying I felt like I hit so many key points because I saw people repeat those mistakes so many times. So maybe that's worth a watch. Like, when you're going to sleep, if you can just put on a video and listen to my dumbass monotone voice before you go to sleep, that's very unfortunate for you that's the last thing you'll be able to hear, but you might pick up on a thing or two and you might realize the next day, hey, maybe I somewhat agree with Kevin here, but I think I found a better way. And, you could learn from it, right? So, I mean, there's so much out there. And the reason why I'm going on this whole rant is because I'm saying that observation is one of the biggest things that's led to my success. And just, tying on to what JP said earlier, it's what works for you. And I guess I could say I'm blessed that I didn't have anybody who taught me and tried to put on their things into my head, and instead I was able to uh, formulate my own opinions and formulate my own thoughts and come to my own conclusions. But the downside to that was that I had a much longer, enlarging learning curve. My failures were I had to go through myself. Um, Luckily, I had a life where I've just become a monotone person, and that's kind of helped me out. So there's always benefits and downsides to everything. So observation is key. I definitely recommend watching the YouTube videos you haven't watched. But as I showed earlier, there's a lot of what's it called? There's a lot of stuff we're gonna come out with, and the I see some of you guys are asking for the YouTube channel. I mean, if you go back to the server, you'll see there's a channel. There's two channels. There's one called Live Recordings that just keeps on giving notifications whenever I upload, which is just the recordings of the live sessions we do. But the next best link is the links channel. If you go to that, you see I'll put our YouTube channel. You could click that, and that's where the YouTube videos are on. There's no sponsorship or anything on there. It's just us talking. So it's definitely worth a shot. I personally hate when people lose money for the dumbest reasons, and especially because there's a lot of crooks out there who try to feed you a life that doesn't really exist. So again, I'm going on for too long, but I think observation is the biggest thing. And if you don't take the time to actually implement what you're seeing, and trying to see if it actually works, then how can you expect to change your red day into at least a break even or even a green day, right? Yeah, it's all about consistency. But yeah, do you guys have any last final questions, or should we wrap this up? JP, any final thoughts you had before anybody asks anything, or?
No, I'm good. Someone asked, are you sharing any presentations on your screen? I heard your talk. And yeah, I mean, this is going to be recorded and it's going to go on our YouTube channel. So
Yeah, I'm gonna. It's recording right now. This recording will finish, and I shall edit the video and post it by tomorrow afternoon. Talk like Trump there for a second.
you did. It was kind of beautiful. I kind of liked it.
Yeah. Um.
I got to ask you a question before we call it a day because I know we're not going to do any ticker stuff, right?
Yeah.
But you took Nike today, huh?
Yeah. Yeah. I took Nike. Would you want me to stream and
I'm
talk
just,
about
I
it,
know
or?
I'm shooting the chart. It's
Okay.
fine. I'm just really curious uh, what it was that you saw in that trade because we're up in the after hours about 0.5%. Obviously, Canada bent the knee, and so did Mexico, and we're waiting on
China.
China to just to scratch that tariff thing, and yeah, I mean, at the end of the day, when we were talking. I was seeing this last 30-minute candle form, and I really like that wick, but I got a little bit nervous looking at the 15-minute candle prior to the last 15-minute candle, because it was looking a little sketchy there for a minute, I thought, and I was a little bit scared to take it into the tariff news. So what made you big ball that trade?
Yeah. I mean, first of all, Nike. If you go onto the daily, for example, we all know that Nike's been being down for quite a while now, and it's just been stuck in this range. By no means do I expect this trade to go like 100% or even 80%, but the reason why, first of all, when I've talked about my swing process, and we had the live session on here. I went through my entire list like a legit 3 times, and I only came up with like 2 good setups. 3. It was Snow, IBM. No, it was actually Cisco, Snow, IBM, and Nike. Cisco died off. IBM, I was waiting till the last 10 minutes, and IBM eventually died off. And Snow, unfortunately, died off as well. And it was just a little bit at a risky area. But you have to realize that when you're doing Nike's always been a Chinese play. So, like a lot of times, whenever you see Baba, Baidu, whenever they rise, stocks like Nike rise as well. And one that's why I'm also heavily long on Baba and Baidu is because you know the Chinese economy is thriving, it is growing, and China is like the only country that's supposed to actually, rebuttal whatever Trump did with the whole tariff situation. How that affects the stock or not, obviously no one can tell, but most likely not. Usually it's a bullish sentiment that comes up whenever it comes to Chinese news, China's news. And you could see here if you look at JP's screen, today that daily candle is beautiful. I mean, we have a huge wick to the downside. We bounced off. Like you guys could even go check on it yourself. Like there were so many levels that Nike bounced off of today that were prior levels from like months ago that were very important for it to hold, and it did that. And also, one thing that you'll kind of realize here is if Nike does hold today, and tomorrow Nike does gap up, what we've essentially created here is a higher low, which then makes it bullish. The funny thing is, I actually took Nike Leaps. I bought Nike Leaps. I believe like not December, January like 15th or something like that. I got it right at the bottom where you could see, JP, if you can move your cursor to that like little pin bar candle, the green one, and, right there on the bottom on the daily. No,
Where?
no cursor right there to yeah that one. Over there, that's when I bought Nike Leaps. And I originally thought, okay, this is gonna, is gonna bounce pretty well. Unfortunately, the contracts they were just impacted by IV way too much, and the price was just not reacting that well, so I got out of them. But I mean, it's finally doing the move that I wanted, and the price skyrocket to the upside before it had that rejection recently was very sketchy. The reason is because I always talk about how I don't like bullish candles have wicks to the upside, and a lot of those candles did. But what we got today was a really strong bullish candle. And if you actually compare Nike's chart compared to a lot of other charts right now, the daily chart is pretty strong compared to everything else. The only other stocks that had a very strong bullish chart were, in fact, Chinese stocks or what's it called? Tech stocks that were directly related to Palantir earnings. So I personally think Nike, gaps up. If not, let's say for example, does not, I can't predict everything, obviously. That's the reason why I also bought time and I bought the 21st expiration. So, yeah, I was waiting the last 10 minutes and just trying to see how IBM, because I sent out that post, I said I'm looking between IBM and Nike. And the last 10 minutes, if you guys look at IBM, it kind of, died off just a little bit. And that's what kind of completely changed the whole fact that I want to be in that I don't want to be in my IBM. And you could kind of see here with Snow as well. So Nike was the only one that was actually not an oversold position, and it kind of crept down if you guys saw on the 30-minute chart that he was showing earlier. So that kind of created a mini bull flag, whether you look at it at the 5 or the 30-minute, it created that bull flag. And then the funny thing was, a little bit after we entered, that's when Nike actually started to move up to the upside. And I think I got like JP and I both got like 6% or something on the contracts.
Yeah, we're like
Yeah.
6.25, 7%. I took that trade with you because I was watching that 5 minute. Actually, forgive me. I was actually watching this area here, like at five, like at 3:30,
On the
and
one
I'm
minute?
watching. I'm like, dude, this is holding this little 1 minute line here. You know what I mean? I'm like, it's holding. You know,
Yeah.
and it was just doing this. This it broke below it. This is when I got a little shaky. But when I saw this do this, literally the last 3 minutes, I was like, all right, they're coming in. Because that 1 minute candle right before that last one, and we got this little wick here. I was like, somebody's gotta know something. And it's funny because look at where we stopped. We stopped right there. You know?
Yeah.
Yeah, so that was I'm excited for this trade. And then of course, you can't make this up, right? In the after hours, we were trading well above, actually not well above, we got above the previous week close. Isn't it funny that I was telling you how I draw the previous week close, right? Look at where we came up to. We came right up to it and we tried closing right above it. So at least we already know that we got that momentum. I mean, we closed right here. Sorry, let's just draw this high. And now we're gonna go into regular trading hours, you know. Let's see if we get that push to that previous week high and we try to retest that previous month high. That'd be awesome. You know? That'd be a
Yeah,
great pop. But Nike can do that easily. It's only like a $2 move, you know?
yeah, absolutely. I mean, I, 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 I don't mean to be a dick or douche to anybody here when I say this, but I get so many messages when I'm in trades where, people are like, "Oh my God, it's up at nighttime and stuff like that." And I sent a post earlier this morning, and I really meant it. Like, after hours do not matter. In my 11 years, I personally have seen that majority of the times it does not matter. The most important hours are pre-market, and I'm talking pre-market from 8:30 to 9:30. Even movements from, 7:30 a.m. to 8:30 a.m. is sometimes completely invalidated. And the moves that really matter is the 8:30 a.m. to 9:30 a.m. movement. So, hopefully Nike keeps up the gap up, but and you know me, I'm pretty monotone, so I'm just gonna say I got no emotions to it. But yeah, I see exactly what you're seeing here, JP. That's kind of what I wanted as well. That if it reaches, close to that 78, 86 level you have, that should easily be like 40, 30%, if not more than 40. But
Oh,
yeah,
I think it'll be
yeah,
more than that, even though we have
yeah,
time on it. I think that can easily become a 50, 60%er because you know that Nike, once it starts going, it starts going. You know, she dances very uniquely because when Nike's one of those consumer discretionary stocks that when it picks up momentum, it picks up momentum, man. You know, it doesn't sit around there waiting for people to just decide what to do. It's like people start piling into it really fast. That's why I love trading it. Great, great, great stock to day trade too.
yeah,
But
absolutely.
so
And
but
if
we got a couple of questions actually. But go ahead. I'm sorry.
I was just gonna answer the next question. So someone asked, "Have you ever thought about live streaming the last 30 minutes of the day to show how you go through your watch list and analyze the charts?" Yeah, sure, I could do that one day. What day? I don't know yet. I'll just have to post when I am
To be
able to
confirmed.
do that. Yeah. Is this stream going to be published on YouTube channel? I've said this many times. Yes, it is. So all our live sessions are recorded, and they will always be posted on YouTube. Might take overnight for me to post them because I'm tired, but yeah. Have you ever created a video that shows that what you're looking at through the different stocks last 30 minutes to determine if it's a good setup? I think one of the videos that JP and I recorded together. Let me see if I can find it here. I think it's all how to find swings. In that video, if you go to our YouTube channel, in that video, both of us talk about how we go through our watch list near the end of the day and kind of comb through everything. I don't exactly show like, step by step everything, but it kind of gives you a little hindsight into what I found as a good setup. And maybe you could kind of infer from that. But if not, then, obviously soon, going back to T. Lally's, damn, I suck at English. According to the guy with the Steeler logo, I'll just come on one day, both JP and I, and do that. Um, you said you bought time. How long would you stay in Nike trade if it doesn't gap up tomorrow? And how do you determine your stop and when to get out of it if it doesn't? Well, most of my swings, the intention behind it is to have it go my way. Usually it's gapping up because I get calls, so I like to have it going my way within the next day after I enter or the day after that. Especially in the market we are in today, because there's a lot of volatility and there's a lot of news dropping from Donald Trump, and it just comes out of nowhere. So I don't I like putting myself in situations where majority of my position is trimmed down decent profit, and I can hold potential runners to just skyrocket my profits even more. But let's do like very quick scenario. Let's say tomorrow Nike opens up at $75. Like you could see briefly on JP's chart, I'll just kind of see how it reacts to the opening, today's opening candle, and see like, okay, does it bounce off of that? Does it not? Um, Not really sure if I'll really average down on that. But if it's just like down and contracts are also taking a hit as well, then what's the point of me trying to hold on to these contracts? I'll just rather get out of them, get into another trade or just find a better entry on Nike. Uh, how I determine my stop is, first of all, the way I enter swings is I like being very precise. I think you guys have noticed that as well. Compared to other swing traders out there, again, this is not a gloat. This is just a fact. Compared to other swing traders out there, usually what I do and what I take usually ends up working the next day. And that's for a reason. I like, as I said before, it working out right away. So then I could put myself in risk-free runners. And if it doesn't work out, usually the stock looks invalidated on the chart. So that's my quote-unquote how I determine my stop. So I place my trades in where I can easily know very quickly if my trade is invalidated or not, instead of me just trying to hold on and think, hey, it's still going to keep on going on. I mean, that kind of also ties into why I personally don't use indicators, because the last thing I want is for me to be stuck in a trade because the indicator shows one thing but my account is showing me complete red. So yeah. Kevin, when you say position light, very light, would you consider to enter a debit spread instead? Well, debit spreads are great. I can't say anything bad against it. In fact, I think I said the next live session. Yeah, so Thursday this week, I'm actually going to go into debit spreads. I think they're great. They're one of the best tools you can use for a small account. And sometimes if you want to enter light on a call, I personally do not see, in my opinion, any reason not to take a debit spread. Like it's literally no, okay, let me take that back. It's usually safer than a naked option. So again, if you guys don't know what debit spreads are, we'll get into that on Thursday. Expanding on the light and heavy notes, how does that play into what you consider a normal position size? Not asking how many you get, but say a normal size is 100%, heavy is like 150, more like 200%, and light is only. Well, first of all, I never go heavy. The only times I go heavy is very rarely, and that's when I know I can risk money that I can risk from, let's say, a very profitable day or something. You probably read it, but you maybe have not. Attached to every single one of my bot posts, I do have a how I trade document. Kind of gives an example with like 10 contracts, so you could also refer to that. But if you want me to just ballpark some numbers, a normal position, let's say, is 100%. Obviously, a light position is anywhere between 25 to 40%. Because and you guys might say, hey, but Kevin, you say light on almost 90% of your positions. Yeah, absolutely. Because give me a better reason of why I should not size light. Tell me that we're in a safe market, and I'll be like, oh yeah, sure, I'll size light. You can't tell me
We're in a
that.
safe
So,
market.
oh yeah, yeah, yeah. We've been in a safe market for a while, huh? Yeah. So we're not in a safe market. So majority of my trades are always going to be light. And hey, you can't really say that's me being a wuss. That's just me being ahead of, being red. So it's worked out for
Can
me.
I
Yeah.
can I say something?
No.
Uh, go to hell. We are. I want to say this without offending anyone. I in no way, shape, or form consider myself to be better than anyone. But I've been very observant for the last couple of years, and I've been in very volatile markets in the 20 years that I was trading. I had an incredible 16-year run where I was doing incredible. Then, I hit a bad slump, and it really messed with me. This is not a trading environment for what I like to call weak hands. You know, this is not a place where you say, I'm going to put $10,000 into a trade and see what happens, because you just don't know. It's a very scary trading environment. I'm a Republican. I voted for Trump. However, we all know that at any point, the orange man can go on TV and say anything that can affect the markets. And when Orange Man starts talking, it can get a little bit reckless. So, even though I love him, you have to be aware that at any given point, volatility can spike up or spike down, and a position that you're in can immediately go red, it can immediately go green, and you just have to be very careful. Now, how do you avoid trading in this environment and not getting caught in a situation where you can get completely screwed by something that happens like over the weekend tariffs? You move into sectors that are going to be the least affected,
Oh,
right?
yes.
You move into sectors that are going to be the least affected. For example, over the weekend, I took multiple trades. I took Chewy puts, which printed at 120%. I took General Dynamic longs. I took NextEra Energy longs, and I took ETN longs. I thought I was going to wake up, and I swung. I have no problem saying this. I swung around $1,300 in trades over the weekend, which is not a lot, but it is a lot. And I thought I was going to wake up to negative $800, which is money that I can't afford to lose. Luckily, because I was in a sector that didn't get completely annihilated, my Chewy puts were the only winner. Nextera Energy I closed for down 20%. General Dynamics I closed down for 20%. And ETN, which was my biggest loser, I closed for 35%. As opposed to a lot of other people that were closing bullish swing trades at down 90 or 100%. So if you're going to try to trade in this environment, try to look for companies or sectors that aren't going to be heavily affected. And if you do want to trade in this environment, look for sectors that are going to be affected by news either to the upside or to the downside. For example, we knew that Mexico pulled the plug on let's just say Trump beat Mexico with the tariffs. You knew that Canada at some point was going to fold. So Canada folded, right? So when you have both, when Mexico gives up, you kind of almost feel like somebody else is going to bend the knee. We took the Nike trade before Canada announced that it was going to not agree to the tariffs, but that they reached an agreement that they would suspend the tariffs. And it happened after the market closed. Not a coincidence. Wink, wink, right? And now we're in a Nike trade where you're seeing that the tariffs that were slapped over the weekend that killed the market are slowly, let's say, fading, and we're trading in an environment and a consumer discretionary stock that is going to be directly affected by these tariffs fading away. So Mexico goes, Canada goes. There's a high probability that maybe that China will go. So who's going to benefit the most out of these tariffs disappearing? It's going to be China stocks. So you can take a small position, maybe two, maybe three contracts because they weren't that expensive, and you can take a gamble that there's a since they're far out, right? Because they're further out contracts, you can take a small gamble that the risk to reward could be that something positive comes out of the Hong Kong Shanghai Open, and that these tariffs get erased from China, and that Nike's going to go up because, as Kevin said, Nike is a China play. So that's just a way to kind of understand where to put your money when it comes to sizing, right? Because you don't have to size big to make money on this trade. You could size small, and the trade could go, and you can make 100, 200%, right?
Yeah, absolutely, JP. And
All right.
also, one thing I don't see people do enough, and I've always said this time and time again. Whenever you have a red day, like let's say today's open, the first things you should be doing is going through. We've already posted our watch list. JP's and I's like S&P full watch list or whatever, our most traded watch list. That's again in the uh, links channel. You just go through your watch list and you see which stocks open green and which stocks are strong, and those stocks are the ones that are usually the most stable. In the main chat, for example, I posted a watch list of just the stocks that I saw today that open up very strong. In the first hours, or were close to closing strong in the last 30 minutes. there's not too many names on there, but it's at least a starting list that you guys can look at. Because I only started this list today. Because I usually just know on the top of my head which stocks at this time are pretty stable. But if you look at the main chat right now, you'll see like in the headline, the stocks I put: Kroger's, IBM, PG, Walmart, Intel. Intel is surprising. I did not know Intel would be the stable, but I mean, since it beat earnings, when was it, last week? It opened up pretty strong today. Cisco has always been a nice stock that I loved. Great tech stock that's not too volatile. Silver and TLT, Baba is very strong. Carvana, Spotify, ET, Disney. So it's just very easy. When the market opens and it's a complete red day and tech is dying off. Maybe instead of trying to worry about what Nasdaq or QQQ or Nvidia is doing, why not go quickly through your watch list and see, hey, what stocks are actually green? Because, I mean, we kind of got a hint that we could possibly be going into a bearish market maybe this year and maybe next year. And the last thing you want to do is keep on trading, bullish setups on stocks that just keep on going down, right? Which is going to be tech stocks if we go into a bearish market. So, yeah, that's my last 2 cents on that. But yeah, I think that's about it for today. We got on for, actually not that long. We went on for an hour and 41 minutes. But is there any last words you want to say, JP?
No, I just want to say that um, I'm not nothing long. I don't know why I said no. Yeah, I do want to say something. A lot of trading right now is going to be very emotional for a lot of people, um, because of multiple reasons. You might be on the wrong side of the trade, even though the setup was bullish or bearish. You know, unexpected news happens. And right now, because of the environment that we're in, and most more so the current state of the economy, with inflation creeping back up and people having a hard time finding jobs and stuff like that. I can't emphasize this enough because I'm speaking from experience. Preserve your capital. You know, this is not a get rich quick scheme. You know, if all you feel comfortable is trading is $50 or $100 and that's all you can do, then just take that. You know, don't live on that concept of if I would have taken more, only if I would have done it, if only if I would have done that. Because I'll tell you right now, there's a lot of people that are losing a lot of money, and there's a lot of people that are hurting every time that they lose, and people that are very weak-minded right now can get very emotional with this and they can come back and revenge trade, and that's going to destroy you. And if you're not trading options and you're not trading your own money, I'll tell you right now, this is a perfect environment for prop firms to capitalize off people's weakness, because everyone trades those accounts. I don't, but they're so cheap that you'll just go on a spending spree, and you'll just literally, it's like you'll have like an all-nighter just buying accounts, buying. And then before you know it, you're like 10 accounts in and you spent $50 on each account and you didn't fund any of them and you go nuts. So I'm just saying, just be careful. And if you're not used to trading in this environment, then don't trade it. Wait till your environment is there, because you don't have to trade every day. And that's something that a lot of my trading buddies have put in my head. You don't have to trade every day. It's almost better to get through all this chaos, wait for your perfect opportunity if it presents itself, and then put on some weight. But you don't have to be looking at the screen all day, and you don't have to be torturing yourself on the ups and downs. Just find something that you know is going to work, or that you feel is going to work. Keep a tight stop loss. If it goes against you, no big deal. Preserve your capital. Don't go on a spending spree. We are not trading in a Mickey Mouse environment. This is not an internet guru trading kind of, year. This is big boys. And I'm telling you right now that we're not talking about millions of dollars. We're talking about hundreds of millions of dollars that are being thrown at each position, and you can't compete with that. So just be careful.
Yeah. All right. And tying on to what you said, we actually I made a video a while back called Why prop firms could be bad for you. You can absolutely watch that and formulate your own opinion off of it. I posted in main chat. But on that note, it's been a pleasure talking to you guys on Thursday this week. So, in, what is that, 2 or 3 days? I'll be on. Well, both of us will be on, and I'll be talking about how debit spreads, how they work, and how they could be a great tool for growing small accounts. Thank you for coming on, JP. It's been a pleasure. Thank you guys for coming on as well. Definitely look at our YouTube, learn the stuff you don't know, and all right. Good night. Peace.
All right. Catch you later, guys.